Web3 nomads. Everywhere jobs for anywhere people.
Okay, so we're back, and yeah, got a really cool guest today, and really cool project. Jose from nftperp, welcome, sir. It's fantastic to have you on. Yeah, man.
Yeah, thanks for having me. This is 0xJose from nftperp, and we've been working with Blockmates for a minute now, and really enjoying our conversation so far, and look forward to kind of unpacking a lot of the work we're doing at nftperp today.
So why this? Where did this idea come from? You know, like who came up with this idea, and where did it come from, and how did tell us a little bit about that? Yeah, I'd love to hear that.
Yeah, for sure. So a quick background on myself. I got into the space in 2017, worked for a crypto boutique venture firm out of Asia for a couple of years that transitioned towards high frequency trading. And I'm passionate about DeFi. I was early user of Sushi, Uniswap, Compound, Yearn. And then around 2021, I joined an NFT, sort of like a DAO, investment DAO kind of thing, where we collectively sweep floors, buy blue chips, and have good buying power and whatnot. And I think the main pain point for me as a collector in NFT, speculations and whatnot, was that it's hard to hedge your downside risks. So personally, I thought it was kind of mind-boggling that you had this entire little industry, a little sector, vertical inside of crypto, with these NFTs that's entirely one directional, and it's directional long, and there's no way to hedge or be delta neutral. So that set up the idea of, in my head, thinking, hey, wouldn't it be cool if you can short NFTs in the form of doing hedging solutions while being a collector. So about 2 months later, after I had that thought, I read about an article that came out from Paradigm, written by Dave White, and the title of the article was called Floor Perps. I was like, oh, this is interesting. So I kind of read on and realized this is exactly what I had in mind this whole time, and it was sort of a validation of ideas from Dave at Paradigm, and so it's kind of gave me this confirmation just to say, like, this is this is valid and I should try to pursue it. Later on, met my protocol researcher, a colleague of mine at the moment at nftperp, a traditional finance guy, worked for CD Group, RBC, Leon Tag, exotic options trader. So we kind of came together and just realized that there's something to this. Let's try to build. So we put together a team, pushed our MVP towards April of 2020, and it's been a blast. It's been a journey ever since. Yeah.
So, I mean, in terms of the market itself, I mean, obviously there's been this, like you said, we've got this sector within, crypto that seems to actually be having a little bit of a run at the moment, and we'll get into that in terms of what your numbers are showing and whether it confirms what the kind of like, the Twitter sentiment is. But I mean, in terms of the market itself, did you guys not have this fear maybe that, maybe the market wouldn't support something like this, that people were precious about the NFTs, or did you kind of go into this knowing that the DJs were always going to reign supreme and it didn't really matter what people felt about the NFTs?
You mean like, do you mean like our conviction towards like why perps or derivatives or NFT would work? Is that your question?
Yeah, absolutely. Yeah, exactly that.
So I think my first thought process around NFT derivatives is that, personally, I think NFT market is incredibly inefficient because of fees across platform, right? So we're talking about platform fees, royalty fees combined, gas fees combined. It's very inefficient. very expensive, and that's why protocols like Gem, Blur really took off because of the aggregation of cross-platform liquidity aggregation. But you still kind of run into the problem of royalties, right? So you got this 2.5% fee on OpenSea, and then creator royalty. Some collections charge 2.5, some charges 5%. I've seen as high as 7.5 to 10%. So what that equates to is liquidity becomes thinner because the cost of liquidity is high, right? When you enter a trade, you have to be up at least 5% just to break even. And to make profit, you need, actually having to bake in the cost of gas fees. So I think it's just quite inefficient across the board. And even you see currently for collections that are charging royalties, you will see the floor will be higher on OpenSea and then will be lower on Blur because of the differences that they charge in fees. So with that, I think if you have a platform that allows people to speculate a lot easier with less fees, involved, then speculation and liquidity and movement becomes a lot easier because they're not so costly, right, at the expense of users. So I think that's one of the reasons why we thought, perps, even without not talking about leverage, what if we just do a 1x spot, long and short, like even that, it would recreate this whole other side of the market that didn't exist before, which is shorting, to be available. And then I think when you allow shorting, it allows better strategies of liquidity, right? Like as a market maker, for example, if you have large inventory on a book and you want to offset your inventory risks, by doing shorting on your directional risk, you can offer a tighter spread between your bids and asks, which allows you to be more competitive compared to other market makers, which benefit users for better entries and better exits. So I think NFTs in general, like the markets, have been operational for a very long time without a ton of competitions, at least on the marketplaces side, that they've become complacent, and that resulted in a very inefficient market. But that's changing, right? When LooksRare came out, it took a chunk of OpenSea's revenue, and then Gem came out, which sort of aggregates all liquidity together. And X2Y2 also came out, took away a good amount of liquidity and activity as well. And then Blur came out, sort of racing to the bottom on fees, and markets is starting to become a little bit more efficient. But at the same time, the non-fungibility aspect of it still, sort of warrants, derivatives on top of it. And I think as a collector, as a trader, I'm a problem-solving type of person. Like the products I create them with the mind of like, this is something that I would personally use. And I think if you're able to put yourself in the shoe of of a user, or the point of view of someone that's having a problem, then if you can solve the solution properly, I think it resonates with people, right? And I think that's one of the reasons why people have been enjoying trading on nftperp thus far. And we try to continue to do that, right? Look for more problems to solve and iterate it with our own unique design to it. Yeah, that's how we think about the market dynamics and user behavior.
Okay, so I mean, you've obviously gotten into a lot of layers there, and I'd like to break it down just in terms of, I mean, obviously for the sake of appreciating what it is that you guys have built, because I think one of the big questions that were asked, I remember when I first saw your website, and it was in beta, and I hadn't heard anything up until that point, and I honestly had stumbled upon the product, and I was like, wow, this is amazing. Like, I can finally short, the apes. I can actually get in there and I can short the Bored Ape Yacht Club. This is like a dream come true for me, and it's like, and I'm sure you've heard this a lot, and it was like, okay, cool. And then someone actually asked, like, so how does this thing essentially balance out? So from an idiot's perspective, it's like, okay, but what happens if everyone's shorting, Bored Ape Yacht Club and no one's logging it? So where is this inefficiency, going to balance out? So I want to actually just, as an example, that's the example, obviously, for us idiots to understand. But now, explain to us how the underlying protocol mechanism works, and how you essentially, solved that problem. Because I think that's probably one of the biggest challenges I would assume you had, unless there were others. And I'd love to hear what those were.
For sure. I mean, the way we look at it is looking at derivatives or mechanisms across the board, on chain, off chain, centralized exchanges, decentralized exchanges. I personally think that there's no perfect solutions with regards to, at least with the current technology stack that we have available at hand. I don't think there's a perfect solution to NFT derivatives, at least on perpetual futures. But what you can get to is a good enough and efficient protocol mechanism that balances out and achieve your goals while having continuous iterations on how you solve problems. So what I mean by that is take an example of injective protocol, which I think they might have rebranded to Helix and then rebranded back. I'm not sure. So injective protocol, they launched Bored Ape Yacht Club perps back in I believe mid or end of April last year. They're an order book based protocol. I believe they still have less than 6 ETH on the entire book. Bids and asks combined. So what I'm getting at is when you have a illiquid asset class such as NFTs, number one, they're hard to price, and number two, it's incredibly illiquid. So to get market makers to be on board on your exchange, you have to have pretty deep sunk cost from the get-go and rely on market makers for the protocol to be operatable. And the direct counterparties can, very easily, lose in some cases, because in some ways NFTs are very predictable in terms of price action. Right? Like Bored Ape Yacht Club's going to do an airdrop, price go up. After the airdrop, price go down. It's pretty simple, right? So if you apply a similar model that GMX does, by the way, as a pure LP and allow directional bets between traders and LPs would get wrecked very, very easily. So our model uses a virtual MM mechanism where even if you have two longs only, with only three longs in a virtual MM, depending on who enter first, because one specific, it's an AMM, so therefore you can't have two people having the exact same entry price if there's only two longs in the AMM. So one will have lower entry price than the other. The second person that comes in with their capital, making a directional push on the price to ratio of assets inside the pool, would essentially become the exit liquidity of the first user. So it's a zero-sum game. So when everyone goes long, doesn't mean everyone went long at the same price. When everyone goes long, they say there's 10 people. The 10th one that goes long usually becomes the exit liquidity of the 9th, the 8th, the 7th. Right? So it becomes a game of musical chairs in a way. Where when you have a inefficient market where there's no direct counterparty, the virtual MM solves it in a way that it achieves the problem that no direct counterparty presents, while having a directional bet for users to and enter a position pretty easily. Now, we think that this is one of those things where it's difficult to find a perfect solution to achieve what we're trying to do, right? If you want to have meaningful volume, if you want to have meaningful sizes of entry, if you want to have ease of liquidity of entry, this is one of those things, the trade-offs you have to face as a protocol. Now, how do we make it efficient? How do we make it scalable? We're still learning. I think we've learned a lot just from our 2 months in private beta, and we're working on different mechanisms to allow the protocol to be long-term, more scalable, and more long-term, more sustainable. And that could mean maybe a hybrid model where you still have an order book on top of it, and then you allow different market makers or then orders to be submitted into the order book, and then traders will come in and essentially try to take direct orders from the order book. So you have a very direct counterparty from another user. And if there's no liquidity available on order book, then you direct to a virtual MM. So these are the things that we're thinking about and working on. But for our first iteration, it's a virtual MM that is just allowing users to bet on one direction and take profit from one another. So it's a zero-sum game, basically. There's a lot of things that come with it, right? There's a lot of the game mechanics of on-chain or off-chain derivatives with regards to funding rates and liquidity. There's a lot that come with that, and it requires the protocol to make certain adjustments to make the game works, right? And these mechanics are things that we're obsessed about on optimizing and testing, and it's quite fun to be in this process of building these different mechanics and see how things play out in terms of testing. And we're lucky to have a bunch of really cool users, being patient with us, giving us feedback, and allow us to build and iterate.
So thanks for that. I think my brain is kind of slightly frazzled now, but I'm following. I think the most important aspect to this, the most important moving part is obviously liquidity, cash. What is the starting point? I mean, because you obviously need liquidity with any project, but it seems like it's even more important in terms of the dynamics of, your virtual AMM. And how did you solve, or how are you solving? Because it seems like this is a moving target for you guys, and like you said, it's never perfect. Do you feel like, you're closing in on what ideally perfect would look like from a liquidity perspective? But just going to the first part of the question, how did you guys envisage solving the problem of liquidity, especially when you're dealing primarily with illiquid assets?
Yeah, so I think there are two things here, right? Like, first of all, for us to understand what liquidity looks like across the spot market, before we get into the derivatives part market, is to first try to understand what NFTs are being traded at, and what's a value. How do we value for NFTs within a collection? And this is where our in-house like Oracle comes in, where we don't use OpenSea, Lookshare, or Blur's listing, the lowest listing value for the NFT collection, and call that the floor value, because we think that's one that's very one-side sell side represented value, and two, it could be relatively easily changed if you have a couple of tokens in your wallet. So with that, like we first determine liquidity on spot in terms of valuations of a collection based on historical sales. And there's a number of different ways that we determine how a sale is considered genuine and is considered within the range of what we consider as an acceptable price range, based on outliers, removals, probable outlier removals. And these are how we determine prices for an NFT collection, because when you have sales on marketplaces, typically a sale happens between a unique buyer and seller there's a cost associated on agreeing upon a value, right? The cost is the royalty fee that you pay and the platform fee that you pay. So when there's a cost associated on when a value is outputted, those values tend to be more reliable than a listing value that you would see on marketplaces. So, with that, that's how we determine liquidity. Is how we determine values and pricing for an NFT collection. And then when you bring it onto the derivative side, the most important thing for a protocol, whether it's on-chain or off-chain, derivatives protocol. Number one is obviously you have the a book that allows people to enter and exit. In our case, we use the virtual MA model, so synthetic liquidity. It's an easier way to bootstrap volume. You don't need to wait for market makers to provide a thick book. But any other exchanges out there with derivatives that are operating will tell you that the most important thing is insurance fund. So what does the insurance fund do? Insurance fund backstops any sort of bad debt, right? So what is bad debt? Bad debt usually happens when there's a missed liquidation. So say the price move against you, you're below your margin ratio that you're supposed to maintain, and you're maybe going to negative equity and you're not getting liquidated. Typically that delta between where you're supposed to get liquidated and where your actually currently position is, that negative equity goes to the other side of the trade, whoever is taking profit from, right? So there's that cost typically is covered by a protocol insurance fund. So on a centralized exchange that are doing perhaps margin trading or futures or even options, leverage would have an insurance fund. On-chain protocols like that are doing derivatives also have insurance fund. So we have that. We actually footed a bill for our insurance fund instead of getting LPs to LP it. And as an NFT trading protocol, we have a leg up compared to other DeFi protocols out there in terms of how much we can charge on fees. Typically speaking, if you're an on-chain derivative protocol, it's very common to charge 0.1%, so 10 bips per trade on your notional value on opening and closing position. Now, that's a very, very low cost of a fee compared to NFT trading, right? NFT trading, typically, if you're not Blur, you're probably doing a 2% platform fee, 2.5% on royalties. So that's 500 bips for a trader on entry, right?
So that comes into what you were saying earlier, is that you really need to have a theoretical 5% gain before you actually can break even. And that needs to be factored in your calculations.
Yeah, exactly. So we're saying here, like, nftperp, we're on-chain derivative protocol, but we're dealing with NFTs here. So even if we charge 3 times the price what other on-chain derivatives are charging, 0.1%, if we charge 0.3% per trade, that's still a lot cheaper than traditional NFT trading. So with that, it gives us an advantage compared to other on DeFi protocols out there that are doing on-chain derivatives, in the sense that we can have 3 times revenue with the same amount of volume that a normal DEX would generate. So that would directly translate to, because the fees that each trade generate gets funneled into the insurance fund, so the insurance fund can grow in size over time, so it can withstand higher open interest, perhaps different leverage allowance, and that's how, with our protocol, how liquidity works. Yeah, and then over time we're going to start. We're working on this at the moment, but we're going to start allowing people to also stake into the insurance fund and be an LP of the protocol. It's not free money, like it's an insurance fund, because you're selling an insurance. Like when there's bad debt, there's misliquidations and whatnot, the insurance fund take a hit. But in exchange, you're getting those, pretty juicy ETH yield as an insurance provider. So yeah, that's how the protocol really operates. And the liquidity part, um, I would say for us to go with a virtual admin model is really to get that first initial user base, that traction, that volume, and then over time we'll have to build something on top of it, so it could be long term, scalable and sustainable as well.
So I'm seeing a myriad of possibilities in terms of the number of products that you could potentially create. Just around, I mean, obviously the insurance fund is one thing, staking is another thing. Obviously keeping the liquidity really deep and vibrant. I mean, is that something that like keeps you awake at night in terms of like all these opportunities that essentially you've almost inadvertently created for yourselves?
Yeah, I think there's a lot that you can do. I think absolutely, like the way you put it. Like when I first started building NFT perp, like I sort of talked about it already, but I'm a collector, right? I don't trade a whole lot of NFTs. Like if I have high conviction towards a project, I just buy it and I hold it. Um, I thought hedging would be nice, so that's why it sort of led
Yeah.
me to build NFT perp. But as I
Mm.
started building and talked to more and more people, connected with different NFT finance builder in the space, you start to realize like this is much bigger than I ever imagined. There's a lot that you can do with NFT perp with combination of other NFT finance protocols. Um, for example, lending and borrowing. It's a big topic in NFT finance. You have a bunch of NFTs in your wallet. They're worth a lot of money. You want some quick access to capital. You don't want to sell your NFT. So what you can do is you put up your NFT as collateral. You take out a loan from a lender, whether it's a direct lender or a pool on a protocol like BendDAO. You agree upon a price. You take out some ETH, and then you go do your thing, and you don't get liquidated. In BendDAO situation, if the price of your underlying collateral value goes down, you get liquidated. There's like a threshold, and then with a P2P NFT lending and borrowing protocol like NFTFi or even X2Y2, you don't get liquidated unless you don't pay back your loan, right? And you miss your payments on interest rates. So this is like pretty cool, right? Because it really solves a real problem. But then, like, if you think about it, the lenders now have directional risk because they are essentially giving you money for a NFT that could drop in price. And if it does, hopefully it doesn't drop below the debt that as a borrower owe to the lender. But if it does, you're essentially going to get stuck with this illiquid JPEG. Um, so what we're thinking here is, hey, if we can offer hedging solutions for lenders, then all of a sudden you can allow the lenders to offer higher loan to value ratio loan offers, lower interest rates, which will kick in for borrowers to say, oh, it's this cheap to borrow and I can get this amount and not get liquidated. Why not? So it kicks off another additional layer of liquidity unlock on different
Mm.
aspects of NFT finance. And that's the things that I did not know was such impactful. I didn't know that could have been done. And it's just one of those things that as you build more and more in the protocol in the space, and as you network more, these things just start to click, and these things definitely keep me up at night because there's just so much you can do with what we've sort of the direction we've taken has allowed us to work with many different protocols out there, and these are the things that I'm extremely excited about. Even with things like maybe you have an NFT, you don't have extra ETH to speculate on other NFTs or trade purpose with it. Why not use your NFT as collateral on NFT perp and enter a trade? So these are the things that we're also very actively exploring and working on.
In a very short space of time, we entered the realm of JPEGs/NFTs/ something that we would never have conceptualized even a year and a half ago. to be in the situation that we're in right now. I find that to be remarkable, but also a testimony to just how many layers we are looking at, just purely and simply from the NFT perspective. Because if you had told me that I could take my punk and I could use it as collateral to get a whole lot of ETH, to either go and get yield on that ETH or to trade with that ETH, I would have probably thought you were crazy 3 years ago. And here we are discussing permutations of how to go about doing this, and then the layers within how to go about doing that, and how you are now going to go and do a plan C and plan D in terms of, this product that you've put out there and all the other products that you could very easily create. Well, not easily, because we know that that's the hard part, but easily conceptualize, into the future, because it doesn't just stop here. This is like a starting point. And that's the next question, is like, if you looked at where you guys are now and what you've created, where would you like to be, just purely from a product perspective? Because I think that's the measure of success, right? In 6 months, 12 months to 24 months. So there's 3 parts to this question. Where would you like to be in 6 months' time with this wonderful product that you've created?
Yeah. So look, like I think from our perspective, we like to see a lot of that liquidity unlock for market makers to be fully operational. We like to see our value add to, whether you're an average everyday user of an NFT finance on a lending and borrowing protocol, or you're an institutional lender. We'd love to be a part of it and allow you to have better strategies or risk management based on using our protocol. We'd love to be able to benefit the LPs out there that are providing liquidity on NFT MMs that are coming out. Maybe it's pseudo swap, maybe it's NFTX, maybe it's Caviar. We'd love to be in the mix of all that and say, hey, we really contributed to this early pioneering stage of NFT finance. With regards to nftperp itself, we love to have all of our listed market pairs having the same volume traded on our platform versus their underlying spot market volume. I think that would be a good sign of us picking up true traction and benefiting users that could not have to get wrecked on fees. If you think about it, like a lot of these NFTs communities, and this is a hot take, a lot of the NFT communities don't like traders, people that speculate and talk about price. And I personally don't think traders should be paying prices for royalties of NFTs because they don't actually exercise the utility of those NFTs. They're just there to speculate. And I think using perps is much easier to speculate. So in a way, like I think speculators should be using perps because it's cheaper, more efficient. And then collectors just go ahead and stay with your usual marketplaces and because you're a collector and you want to attribute value to the creators and you actually use the NFT and exercise the whether it's you're putting it as a PFP, you're flexing it, or you're getting into token gated events, you're reading the benefits of having that NFT. Sure, pay for a royalty, but as a trader, I think nftperp is pretty attractive in terms of efficiency. So yeah, like I think a good sign of us getting good traction would be having the same amount of volume on our platform versus spot. And then there's a ton of stuff in the work with regards to our protocol, and hard to jump into the exact KPIs of things we want to hit here. But big picture, that's where we want to go.
So are we moving on to the 12 months now, or are we still at 6 months?
Yeah.
I mean, in terms of the products, thanks for that. I mean, I think it really does kind of give a very good overall picture in terms of where you want to take this thing. In terms of other products that are kind of like an offshoot of this, I mean, we've seen, you know, the Dopex community like create something, you know, around NFTs. We've seen, you know, kind of like a number of interesting ideas around NFTs, but, you know, kind of like what's the right terminology? The financialization of NFTs, where you're obviously using collateral, well, NFTs for collateral, where you are treating an NFT like any other asset and then taking that intrinsic value as collateral and then obviously moving into the space. Where do you think that model is going, you know, in terms of the greater spectrum of what crypto has to offer? Do you think it will always be kind of like ring fenced around NFTs, or do you think it's going to like break into other spheres?
Yeah, I think one thing I'm particularly bullish on, I think most people associate NFTs with PFPs and JPEGs. I
Correct.
think
Yeah.
I think it can be much bigger than that, and I think that's what we've been telling ourselves. It should be bigger than that. One of the biggest iterations of very, very valuable NFTs that maybe we don't really think about a whole lot is financial NFTs, right? Like Uniswap V3 positions. I personally think there's a lot of potentials for those NFTs to be financialized and turn into financialized assets. So the team at Astaria, which is another linear borrowing protocol, have been exploring pricing a specific ranges of NFT LP positions on Uniswap V3. So the lenders could essentially offer loans for liquidity providers that are generating yields on their NFTs to get liquidity. So as a liquidity provider on Uniswap V3, you could take your LP token, take out a loan against it to do whatever you want. Maybe it's MEV strategy, maybe it's more liquidity provision to get extra yield on top of it, and you can pay back your loan using the underlying interest your NFT is generating by being an LP on Uniswap V3. So these are essentially continuous options, put options as the liquidity providers for these loans that they're writing. And if there is an efficient way to price it, there's an efficient way for the lenders to be, perhaps hedging with perps from our side. So then all of a sudden you're talking about options and perps combined, which is like a whole nother level of financial products around structured products. Financial NFTs, that's where I think things are going to go in the next 6 to 12 months. And we like to be on the forefront of that. I guess outside of that, like one of the narrative that we like to think about around NFTs was, on-chain gaming assets, or perhaps metaverse, real estate, virtual lands, and maybe there's something to that, right? Maybe a lot of these things could be taken out as collateral for loans, and you get a pretty efficient markets around how these things are priced, how these things could become debt markets. I think that's kind of where things should head towards. Every cycle of innovation comes with an abundant of resources coming at its way, and a lot of them are not going to do very well. But usually after the cycle comes over, and there's some real tangible value could be captured and explored, and I think this is going to be one of them. So that's what I think about when it comes to where I think these things can go.
Awesome answer. Really like that answer. It really does touch on cycles. I love that, because we forget that, you kind of get caught up in I think just we intrinsically wired to kind of look at the negative aspects of, like things fall apart, and like, what are the negatives? What are the the drawdown implications, but there's all that innovation that happens. Sure, a lot of it kind of gets discarded and forgotten about in the back of, in this kind of like this back room, but it eventually finds its way back again. And I think that you guys are obviously tapping into that. It's kind of like, what are the real innovations that came out of this last cycle, particularly obviously from NFTs, and you're building this product, and you're saying we've understood the value here. Now we need to capture it and present it in the ways that we're presenting it. Obviously from an exchange, so that people can trade. Obviously from liquidity in terms of how we apply it, collateralization. Brilliant. Just speaking more around the platform that you guys have built, we've obviously touched on, how you guys are kind of pricing liquidity, how the dynamics between longs and shorts is working. I see that in terms of the kind of like the life cycle of the product, let's just kind of rewind a little bit and go to the beginning again and just talk about, this idea that you guys formulated. You speak to us about, the beta process and where you guys are now, and, what is the short-term plan around the product and kind of showcasing it. Obviously, we are in a way showcasing what it is that you guys are doing here, in terms of speaking to you. But from your perspective, I see also that, over December, you guys did close or just over 16,000 ETH in trading volume, which is very impressive, especially considering that you guys were in beta. How's January looking? And tell us a little bit about the product and your rollout and where you guys are at.
Yeah, sure. So yeah, we started the beta, the private beta, which is like a only accessible for whitelisted users. We have this application process for people to fill out the form, and then we kind of manually approve all the traders that are coming in. We started that in November, at the end of November, 25th of November when we started. Like you mentioned, we did 16K ETH, 16K ETH in volume, and then in January so far, this is the 19th of January as we're speaking, we've done a total of 36K and 500 in ETH, ETH volume. So that's around $48 million in total volume from 1,200 traders at the moment. So I think it's a decent volume for an NFT related protocol. And what we'd like to do for the next couple of months is really start to cross the I's. Cross the T's and dot the I's.
You would cross the
I am crossing my I's right now.
The T's there.
Yeah, so it's just trying to really finish up on some of these product features that we've been wanting to introduce for quite some time. Around staking, being an LP for the protocol. Rolling out our limit orders protocol on top of virtual AMM, and these iterations are currently being done, and we've observed and collected a lot of data from private beta tests, and these are some of the data points that are telling us a story, telling us some insights, and we'll have to kind of capitalize on that, make iterations of the protocol, and then in a couple of months we'll think about pushing it to public and allow everyone to trade. And we'll take it from there. I don't think we'll ever come to a point where we say, all right, this is good to go, release it, and then just let it run. I think for us as a team, we're very agile in terms of continuously looking for things to optimize on, and I think that's a good representation and reflection of who I am. Like, I'm easily distracted in terms of new things and new ideas to work on. I'm a bit of a perfectionist at times in terms of like wanting to make sure the things I create speaks its quality, and making sure that users just have a good world-class experience with using the product. And we're obsessed with optimizing and testing, and I think over the next couple of months is a good time for us to collect all the data we've gotten so far, think about how to optimize it, iterate it, test it again, and then push it live to public. And there will be a continuous effort of doing all of this, while handling community building, business development, working with other protocols. It's a hell of fun. We're really enjoying all of this.
So I'm on the outside. I'm an observer, and I'm having fun watching this thing do its thing. It's quite remarkable, actually, and it's like, I mean, it's easy to say like, yeah, this project is interesting and it's exciting, but it's really easy to say that about nftperp, and I'm really not trying to kind of like overdo it, but that's the way I feel about this project. And the reason why I feel about this way about it is that it's simply taking, essentially in my mind, this almost hypothetical idea, and it's turning it into reality. And it's not often that you see, I think the right word is like crypto alchemy. It really is that for me. It's like you are being an alchemist here, where you're taking value, and I almost see it as being like you're stretching it. You're stretching this value into so many different spheres that it blows my mind, and I love that aspect of it, and I'm not surprised that you guys are having fun, and I really do hope, for the sake of what it is that you're doing and for the space, that it just carries on, that it just kind of like snowballs and snowballs. And I'm really excited to see how this thing develops, in terms of the different permutations and the different projects. I almost expect you to say, dude, we're going to do like this, or we're going to do that, and it's going to fulfill this function, and we're going to make money in this way, and users are going to do this. And that's where my next question is going, is like, how are you planning to incentivize users to keep coming back beyond just the degenerate part of it and trading and all that good stuff which people love doing? But is there anything else that you guys are considering and looking at from an incentivization perspective?
Yeah, so we do want to thank our users for trading on the protocol. So we have this trading rewards, bit of a retroactive campaign, if you will. We like to give the users feel that they have a sense of ownership towards the protocol by giving them our governance tokens. So there's a level of that. I don't think that's a way to keep people, in my opinion. I think it's attractive and it makes sense for those that are trading on the protocol to get this in return as a thank you. My thinking around retention, because really it comes down to retention, right? How are we retaining
Correct.
people if other protocols are offering similar things? Maybe that comes down to fees and whatnot. So I think our take on this is, how do you effectively create a sense of belonging and a sense of ownership and sense of identity to a group of users, to a group of people that are trading on nftperp? And I think there's a big component of digital ownership and digital sense of identity and belonging, and in Web3, and that's NFTs, that's PFPs. Azuki, Moonbirds, BAYC, Cool Cats, Doodles. If you own one of them, you're gonna let people know about it. You're loud, and you're loyal to them as a collector, because you belong to that group, and you enjoy being in there, and you want to show off that you're a part of them. And I think, like, if you're able to capture that in terms of community curation and culture design, um, we want to be able to offer that to our users as well, where they feel that they're a part of something. So I think there's going to be a social aspect to nftperp. We'll be dropping an NFT collection. It'll be a free mint. But we want to make sure people feel that they're, belong in this group, and feel that they're heard and that they're part of something. It's not just look, here's my product, use it, pay me for it, and if you like it, stay, and if you find something that's cheaper in the same thing, go somewhere else. I think it has to be more than that. I think there needs to be a relationship built with the project team, with the communities, but also between community members. Like, we love to have that sense of culture, a sense of like what NFTs have brought out in Web3 that DeFi couldn't. Like, we love to combine the two and say we love to offer that as well. I don't know if that makes sense.
No, it completely makes sense, because what you're talking to is community, and community it's the success as well. It's the prerequisite to success in pretty much anything, and especially in crypto. And the success of all these, as a collector, you would know that the success of all of the ones that you mentioned, despite all the bad publicity and inverted commas that projects get, they still thrive, because there is, like you say, if you own a Punk or if you own a Nazuki, you're going to let people know about it, and you are a part of a clan, and you are part of a community that we all crave. It's the most bizarre thing. I mean, you look at what Blockmates has done over the last 2 years, is that we're doing what we're doing primarily because we have a community that supports us. Without that, we'd just be another, media company that's churning out stuff, which is not what we do, right? And it's the same with what you guys have done. I've been in your Discord. I've seen the energy there. It's very, very obvious. And you need to give me all the details around your mint, because I definitely want to get in on that. It's kind of like, because I see that in the community that's there. And if there's one thing that needs to be nurtured as much as the product itself, is the community behind it. And if you get that right, it's easy from that point onwards, because then you can launch other projects. So this is the interesting thing about this space, is that true success is delivery, honesty, and continuity. And if you manage to do that, sir, you will be very successful in this space for years to come, and you will make a tremendous amount of money. But I get the feeling you already know that. And it will be really interesting to see, where you guys are at coming back to the 6, 12, 24 month, thing. Like, what have these guys done? Where did they start? What have they done? And where are they going? So I really look forward to that. And yeah, it's not often that I would say that to a founder, but I really see that you guys have that capability, and it's just purely because of how like community orientated these NFT projects are, and then that just translates into this, because this is, I mean, you guys can take this thing to such a huge level. So I'm very supportive of that, and it's going to be really interesting to see how you manage to pull that off. So good luck, sir. Keeping an eye on you guys.
Thank you, mate. You have no idea how much that means to me. It's been a journey, building nftperp, and we're only at the beginning, and we're incredibly grateful for everyone in our Discord, every user. I often say this. I think protocols, DeFi protocols, or even whatever product, like, without its people, it's just a few lines of code, and it's the people, the team, the community members, the users, even people that are just trolling, like even they're also contributing to it. It's the people that make it, make the protocol. Without the people, value, money, it's all mercenary. Like, one day a gamer protocol will stop giving you yield, you're gonna go somewhere else. There's no customer royalties in those situations, and I think we like to be more than that, right? We like to really capture, we like to really capture that, and say these are the things that we value, and hopefully people that are in nftperp resonate with us and agree with us on that and stick around. But yeah, Thank you for
So just
the kind words.
yeah, it's a pleasure, man. I think it's like I said, I really, really like. I can't tell you how awesome it is to see this kind of innovation, because this is what we need. This is where we take from a crypto community, we take products and we create our own identities within them, where we take those real world cases and we essentially make them our own. And that's what you guys are doing here. That's what I see. It's like you're taking it and you're making it your own. You're molding it like this piece of clay. And it's like, this is my baby. I'm going to do it this way. It has relevance. It's got all of those good ingredients. And I've got a community that supports me. We're going to make money, because obviously we want to make money, but we're going to have a really good time doing that. And people recognize that. It's like, cool, you must make money. You must provide this thing that's going to do positive things for you, and then just grow it, and it's really cool to see that. I wanted to, just before we call it, because we're coming to the top of the hour, and we're definitely going to get you back in at a later stage, because I know that there's quite a lot of developments on the horizon. I wanted to just find out from a, primarily from an alpha perspective. I mean, I think you've dropped quite a bit of alpha in this interview, but from a governance token perspective, from a token, the identity of what it is that you're building around a token, can you just kind of give us some broad strokes around that? Something that you have got planned? What is the story with the token, and is there an airdrop involved? Let us know. What are your thoughts around that?
Yeah, so it's pretty straightforward in terms of distribution. We have distributed some amount of nftperp tokens. So we have this interesting NFTP tokens right now that's out there. We minted them. Those are not tradable, you can't transfer it between wallets. So we've airdropped it to our users across different events. So we've done 2 paper trading competitions on Arbitrum prior to our private beta launch, and we've done 1 private beta trading competition in December last year, and we are currently running our second private beta trading competition, and the winner of competition gets prizes, and the prizes are in these NFTPs. On top of that, the month of January, and starting like on a monthly basis, each month will be an epoch. We are giving away a fixed amount of NFTP tokens to traders on the protocol that are trading. So it's volume and converging trades based in terms of rewards. You can't wash trade, because you have to hold your position over a certain period of time for that volume to be eligible. So this is the current way to get your hands on the tokens, if you will. Yeah, and then that's kind of the way it works at the moment. We are going to be launching the token, I guess, at a later stage, after the protocol is live, and we think it's good to, the demand is there. We have shown demonstrated our ability to curate a good community that is ready for governance, voting, and structuring. Then we'll release token. Then the NFTP will be redeemable for NFTP. That's the ticker, by the way. And the way we think about nftperp tokens is, it'll have a level of revenue generation from the protocol that goes to the nftperp token, like it would be stakers. And then a large portion of the protocol revenue is going to go towards the LPs that are providing liquidity on the insurance fund and whatnot. So, look, like I haven't really seen a token that has done well, and defined well, right? Like if we talk about price action, most of the DeFi tokens out there are down 90% or 80% from all-time high. With the exception of GMX, they've done quite well. But Also, GMX is what, like less than 2 years old. So, you know, I don't know, give it a couple of years. I don't know if that's going to work out. Maybe it will, maybe it won't. But our thinking is just like, hey, why not think about and apply what's worked so far in the space, and try to have similar mechanics around the token economics of it. The protocol operate on a very, very different level, by the way. We're not similar to GMX in any way, but a token aspect of it could be observed and perhaps inspired upon. So we'll have some level of that is the direction we're thinking about. So the token value accruals based on real ETH generation of yield from the protocol, and then you have governance structuring on top of it, and there's different game mechanics in nftperp protocol that will introduce that allows the token to be utilized in game theory aspects of the protocol.
A lot of deep thinking, sir. What are my take homes from this interview? Definitely not looking at things on the surface. There's a lot of layers here. A lot of exciting stuff that, I mean, I've said it about 15 times already, but it just seems like there are so many different layers here that, yeah, I don't know. If I was in your shoes, I wouldn't sleep much, to be honest. I'm sure you don't, but yeah, there's a lot here. There's so much to actually consider. And, I remember we had a discussion towards the end of last year, and we spoke very much about, the NFT space. I mean, that's what we do at Blockmates, right? We kind of like, we want to focus on what are the possibilities in the markets, what are the possibilities in the space, and what are the narratives around it. And one of those things was obviously the role that NFTs have to play, in the real world. We talk about property and we talk about, collateralization around NFTs, but we never really thought about how NFTs themselves could create their own models of what traditional finance and even crypto, has presently. And that's what you guys are doing now. And it's going to be really, really cool to see how it all plays out, over the next year or two, and the iterations of all of these, like so-called real world, applications. So good luck. It's been really cool to speak to you today, and yeah, we'll definitely get you back in. We're going to do a couple of more articles on what it is that you guys are doing. I want to actually do how to actually use the platform itself. We obviously did an article. I hope you read it, by the way. I'm sure you did. And if the listeners haven't read it, go check it out. Go to blockmates.com. We did an article on what it is that Jose and them are doing. It's kind of like an idiot's guide for everyone out there. So go check it out. We're going to be covering other aspects of what it is that they're doing in the coming weeks. So yeah, and to everyone listening, please like and subscribe. If you're listening to this on a podcast, just give us 5 stars. You want to. It's not often we get guests coming in here and kind of just laying it all out for us. So thank you, sir. Jose, it's been an absolute pleasure. It's awesome to hear what you guys are doing, and yeah, man, it's great to kind of get a glimpse of the way you think about stuff. So really appreciate it.
Thank you for your time. I appreciate you having me on. It's been a pleasure speaking with you.
Yeah, man. Cool. Take it easy, and yeah, I'll see you out there, and we'll chat some more and get you back on. All the best.
Sounds good. See ya.